So what you'll normally get, here's what came out of my the tax slips for my investment account. I got a welcome package, talked about the T5 summary of investment income I was going to get, and a few other items on there. But here's what we earned in 2021. What you see is box 24 was $4,188 of actual dividends received. Now the next box, 5780, they actually gross up the dividends. Is that fair? Well, they're saying I earned $4,100, but we're going to treat it like you earned $5,700 of dividends. But the third and final box is the dividend tax credit, and that's going to actually make things seem okay at the end of this. So what we're going to do is calculate an effective tax rate based on the three numbers I just showed you from my prior T5 slip that we saw on the other screen. Now, to summarize, we received $4,188 of dividends throughout my Canadian dividends on my investment account, non-registered last year. We use that number to gross up to $5,780. It's about $1,600, roughly, I'd say, 25%. Or maybe more than that. I can't do my math right now. But basically, if I have a 20% tax bracket, that results in this $5,780 gross up amount being charged 20%, which is $1,156 in taxes. So that's about a 25% tax rate. So it's more like a 30 some odd percent gross up. But now the third box was my tax credit of $868. So what the government says is we're going to charge you $1,156 of tax, but you get that dividend tax credit because these are eligible dividends. So that results in me paying $288. So basically $300. And what does that give me for an effective tax rate on my 41? Let's call it 4,200. Basically, I take 288 divided by 4188. That gives me a 6.88% dividend. And basically, I'm keeping 93% of my dividend. And if I was a salaried employee, I'd probably be in 34% tax bracket. So again, dividends are tax advantaged, or actually there's a 20%. That's my federal tax rate. Throw in a provincial. We're going to keep the calculation simple. And if you really like what you've seen, please click that subscribe button on the bottom, and we can bring you more of this kind of content as well. So now, where that 4188 came from was this is all the different companies that paid dividends into my account. Here was how much interest I paid because it's a margin account. It's a story for another day. We're going to ignore it. But again, those are what totaled up throughout the months. You can kind of see what stocks paid what dividends for me. This was the prior year. So this is just that last page again, where we zoom in on the 4188 total dividends from Canadian taxable corporations. They get the tax treatment. So it's pretty straightforward there. The other slip is a T3. These ones usually arrive in late March, and basically you're going to see the BMO Covered Call ETF, which was one of the big ones there. Those give a regular dividend, $800 in distributions. That's a popular investment. We've got RioCan, we've got True North, Commercial REIT, along with my Suncors and AltaGas, and the bank stocks we had as well. So once again, thank you. That's it. We got to see some quick math on how to do the dividend taxes there. You're going to see TD Bank, Scotiabank, Pembina Pipeline, Enbridge, all Royal Bank pay me dividends. Again, this was the basic one there. Remember this tax sheet. It's a really good one. So thank you very much. And we will talk to you again soon on the Money Mind 604 investment channel.